Imagine two law firms, both generate around $1 million a year. Both have talented attorneys. Both are growing. But 5 years later, one firm has expanded to multiple locations. The other one is struggling to make payroll. What happened? It usually isn't because one firm had better lawyers. It's because one made better financial decisions. After working with business owners over the years, we've noticed the same mistakes showing up again and again. Today, I want to share 7 of the biggest ones. Mistake number 1, confusing revenue with profit. The first mistake is probably the most common. Owners celebrate revenue. We built $250,000 this month. That's great. But here's the real question. How much of that did you actually keep? Revenue tells you how much came in. Profit tells you how much stayed. We've seen firms with impressive revenue numbers that are still struggling financially because expenses quietly grow alongside of them. Mistake number 2, ignoring cash flow. This one surprises a lot of people. A profitable business can still run out of money. Why? Because cash flow is about timing. Maybe clients take 45 or 60 days to pay, or maybe the hours are worked but they are sitting as work in progress, waiting to be billed at all. Meanwhile, payroll, rent, insurance, those don't wait. Healthy firms don't just monitor profit, they know when the money actually moves. Mistake number 3 is waiting until tax season. One of the most expensive habits we see is treating tax planning like a once-a-year event. By the time April arrives, most opportunities to legally reduce your tax bill are already gone. Tax strategy isn't something you do after the year ends, it's something you build throughout the year. Mistake number 4, never looking at financial reports. Imagine flying an airplane without looking at the instruments. That's exactly how many firms operate. They only look at their bank account, but the bank account doesn't tell you your profitability, your margins, or where your firm is headed. Your financial reports are more than paperwork, they're decision-making tools. Mistake number 5, mixing business and personal finances. This seems harmless until it isn't. Using one account for everything creates confusion. It makes bookkeeping harder. Tax preparation becomes more complicated. And if your firm is an LLC or an S corporation, mixing funds can weaken the legal separation between you and the business. Mistake number 6, growing too fast. Hiring too quickly, adding office space, taking more cases than your team can properly track and bill if revenue doesn't keep up. Those costs stay. The healthiest firms don't just grow, they grow intentionally. And the last one, mistake number 7, thinking your CPA only files your taxes. This might be the biggest mindset shift. A tax preparer helps you comply. A strategic advisor helps you make better decisions. Should you hire, expand, change your entity maybe, add a partner? Those conversations shouldn't happen after the decision. They should happen before it. Financial success isn't usually determined by one massive decision. It's determined by hundreds of small decisions made consistently. Every week, we share practical financial insights to help law firm owners build stronger, healthier businesses. And if there is a financial topic you would like us to cover, leave it in the comments down below and we'll see you in the next one.